Good morning. Welcome to Market Monday for May 19th, 2025. Well, that was quick. The stock market recovery from the tariff tantrum, that is. We can see right here, and it's still probably pretty fresh in our minds, how quickly the tariff-induced sell-off happened. 21% over 33 days. That's actually most similar to the COVID shock that saw 35% drawdown over just 23 days, taking just over 3 months to fully recover the losses. This is in stark contrast to the more drawn-out bear market of 2022 that saw the Russian-Ukraine war escalate and inflation we hadn't seen in 50 years grip the global economy. That drawdown was 28% over 6 months, with a recovery taking almost a full year. Over here, both .com and global financial crisis were much more brutal in terms of duration, drawdown, and time to recover. We'll see where this current recovery ends up, but so far it appears peak tariff is behind us. Ah yes, peak tariff. I recall something about that. That likely means the April 2nd announcement was likely peak tariffs, with subsequent announcements likely to be directionally downward as countries begin negotiations and make concessions. Indeed, that is precisely why we're here for you, week in, week out, to provide what's hopefully a measured and thoughtful perspective, especially around pivotal moments where it literally pays to have a cool head about us. Even though peak tariff may be behind us, we're still entering a heightened tariff regime. This is going back a long time to 1900. We see up until 1950, there was generally a higher tariff level, then another drop after 1975, and finally next to nothing after 2000. At peak tariff, we would have immediately went back to levels not seen since the early 1900s. And even with the reduced China tariffs, that still puts us at an effective tariff rate of 14%, right around that pre-1950 level. So even though the shock and uncertainty of peak tariff is behind us, perhaps we should still expect a few bumps along the way. After all, the Walmart CFO expects consumers to start seeing higher prices at the end of this month, and certainly in June. But of course, here's your periodic reminder that whatever your view of tariffs, you're more than likely not viewing it just through a purely economic or logical lens. We're humans, and humans are tribal. It's not a bad thing, it's just who we are, it's our nature. But that doesn't mean we shouldn't acknowledge some of our human fallacies and perhaps try to improve our perspectives in spite of them. Case in point, here's a look at consumer confidence, split by political party and across 5 presidential regimes. What happens when your political candidate is in the White House? Here's Bush, Obama, Trump 1, Biden, and Trump 2. You can't make it up. Are you the only one who's not subject to political tribalism? And today, we'll leave you with, last week, JP Morgan, yes, that JP Morgan, is teaming up with a couple digital asset companies to bring bank settlement infrastructure onto the blockchain. Since inception, Kinexys, JP Morgan's private blockchain, has processed more than $2 billion in daily transactions for a total of over $1.5 trillion. Still think blockchain technology is just a fad? Have a great week.